Okay, so I talked at the beginning of this chapter about the importance of distinguishing between a business and a hobby. You gotta have some sort of profit motive with a business. Doesn't necessarily mean you're making a profit, but that has to be your motivation, is that you're doing it in order to make money. Your primary purpose is not just enjoyment, although it's perfectly acceptable to enjoy making money or whatever you're doing in order to make that money. But if the activity, should say, is not a business, there's no profit motive to it, then it could be reclassified as a hobby by the IRS. Now the difference is that hobby losses, you don't get to deduct the expenses for hobbies. You have to claim the income, but you don't get to deduct the expenses. So when it's a business, you get to deduct all of those expenses. With a hobby, even though you may make money off of it, you don't get to deduct expenses from it. So here we've got Alex is a CPA, enjoys decorative woodworking as well. He's working both sides of his brain. Makes decorative rocking chairs, tables, and other handcrafted furniture. Spends 10 to 15 hours a week making the furniture and had gross sales of $3,000. His expenses for the year were $10,000. If it's treated as a trade or business, he would have a $7,000 loss, and he would get to deduct that against other income because he had sales of $3,000, but his expenses were $10,000. If it's a hobby, however, none of the expenses would be allowed, and he'd have income of $3,000. So there's a big difference there tax-wise between those two scenarios. So there's a lot of different factors that are used to determine whether something is a hobby or a business. If you recall, when we talked about when we were in payroll, we talked about the contractor versus employee distinction, and how there are lots of different facts and circumstances. There's no one single fact that determines whether somebody's an employee or a contractor. Same thing here. There's no one single fact that determines whether an activity is a business or a hobby. Everything is taken together, and these are some of those different factors. How does the taxpayer carry on the activity? The expertise of the taxpayer. So like if you're doing it, you're crocheting Afghans and you just do it in your off time while you're watching TV. I'm sorry, that sounds like a grandma thing to do, doesn't it? I don't crochet. I do knit, but I don't crochet. But if you're just doing that in your off time while you're watching TV and you have to sell a few here and there, that's probably a hobby, right? Time and effort expended by the taxpayer in carrying on the activity. Expectations that assets used in the activity can appreciate in value. That one's kind of weird because most equipment doesn't appreciate in value. How successful is the taxpayer? History of income or losses with respect to the activity. I'm going to come back to that one here in a second. Amount of occasional profits, if any, that are earned. Taxpayers' financial status. So they may look at that as well. And elements of personal pleasure or recreation. Like I said, it's not one single piece of this, but it's everything kind of taken together. I said I wanted to come back to history of income or losses with respect to the activity. Most people have in their minds, you can't have losses for more than 3 years. Like there's kind of this unspoken supposed rule about losses from a business, that if you don't have any profits from the business over 3 years, then it's not really a business. Well, it's not necessarily the case, right? You could have a business that just has had losses. You're treating it like a business. You're trying to make a profit. You are doing everything that any other business would do. It's just, maybe a pandemic happened, right? Just as you were starting it. So that is not a hard and fast rule. But if after 3 years there has been no profit, you can expect that the IRS may start asking questions about it. Doesn't mean it's hard, like I said, it's not a hard and fast rule, but scrutiny will increase after about that period of time. Okay. So if the IRS asserts that an activity is a hobby, the burden to prove that the activity is a trade or business rests with the taxpayer. So the taxpayer has to prove that it is a business. So that's where you want to, like I said, are you marketing it? Are you out there trying to get customers? Are you trying to make money off of it? If the taxpayer has shown a profit for 3 out of 5 years, consecutive years, the burden of proof then shifts to the IRS for proving that it's, now the IRS has to prove that it's not a business. Education expenses. So if education is required in one's trade or business, CPA is a good example. CPA requires continuing education every year. 40 hours of continuing education is required every year. It is not free, so the taxpayer has to pay for that. That is education for, not for the furtherance, it's not to train them for a different career. It is to maintain their skills and as a requirement of their certification. Therefore, 100% of that education with no limits would be deductible. Now, you still have the reasonableness limit, obviously. But, you know, if you have to spend $2,000 on continuing education, that would be fully deductible. Any education, though, that is taken to attain new skills. So if I'm a CPA and I'm taking classes on continuing education, I'm taking classes on keeping up on the tax code, sharpening my QuickBooks skills, you know, brushing up on my state income tax knowledge, that sort of thing. All of that is directly related to the job that I'm currently doing and would be 100% deductible in my business to offset any income that I have as a CPA. Now, if I also happen to be taking some classes to, I don't know, maybe I'm thinking that I want to become a nurse, and so I'm taking some classes in the evenings to become a nurse. That is not related to my business, right? So those expenses, now I may be eligible for some sort of tax credit for it, maybe, maybe not, but those expenses would not be deductible because it's to qualify me for a different position. Okay. Let's see. If there's anything else here. Oh, and yeah, so the eligible education expenses would include also book supplies, fees, and travel to get there. So if I was taking a college level class, say I needed to brush up on my partnership taxation, and I found a class at Iowa State that I wanted to take. That would be directly related to my business. So just because it's at an institute of higher education rather than like a continuing education class doesn't mean that it's then not eligible for that, okay? As well as all the book supplies and travel. Questions? Yeah.
Is it just for self-employed taxpayers?
Yes. Yep. Now, individuals may qualify for certain tax credits, and we're going to talk about that in chapter 9. I think it's chapter 9. When we talk about tax credits, there are certain education-related tax credits that the not self-employed may be eligible for, but what we're talking about here, yes, just for self-employed. And it offsets that business income, right? So it's only offsetting that self-employment income. Other questions?